And I am Punya Agarwal, ACCA affiliate and one of the admins of Being ACCA. And in this video, we will be discussing some of the common internal controls or maybe types of internal controls that are there in an organization to mitigate the risk. In the last video, the concept capsule number 4, we discussed what are internal controls and objectives of internal controls. And I used very layman language so that you understand give you very common examples so that you understand what are internal controls and how can we what are how do we implement them in the organization and what is the main objective. So in this video I will be explaining some of the examples and some of the common types of internal controls. So let's begin with the first one. Again, this topic is very commonly asked in your BT syllabus, in your AA syllabus, and part of it is also important for your AAA syllabus. So let's begin with the first first internal control, which is physical controls. Okay, in the last video, I gave very common example about the warehouse in which I discussed about the camera, that they can put camera, they can put a security guard over there, right? So these are examples of your physical controls which you can put. Now if you are working in any types of organizations, there are organizations, you would be having a swipe card or an identity card which you would put in the system, and then you will be able to access the door and the room that you are going into, the business building, right? Or you may be having like a biometric system, like a fingerprint system, in which you have to enter your fingerprint and then the door opens for you. So these are all the physical controls that the organization actually implement so that they can their records are correct and the risks are mitigated. So if you see what will happen, what is the risk in the system when we're talking about the businesses, when we are talking about your company, is the payroll risk. That there can be a scenario wherein the employee says, no, I was present on that day, I did come to the office, but your record says no, the employee was absent. So there can be a scenario where the employee is actually bluffing and is actually doing fraud and saying no, I was present. So this is the proof, this is the internal control which you can put so that you are aware that yes, the employee was present or not present, and your records are not over or understated, right? So similarly is the case with your camera or security guards. Again, you can also put like biometrics outside your warehouse so that only the authorized person can enter in that warehouse. So implementation of access restrictions to building specific office areas, as I just mentioned, or equipment employing measures such like turnstile, swipe cards, we just discussed, passwords, we just discussed over here. Additionally, using physical restraints such as securing non-current assets to prevent unauthorized removal. Again, we talked about the non-current assets over here when we talked about your warehouse system, right? So these are some of the examples which I gave. Let's move forward with the next type of internal control and common internal controls which usually organizations have is your authorization and approval limit. So let's take this same example which is being talked over here. So there can be a scenario in which there is a junior employee and he has been given that okay, you can make a booking of $500 maximum, and if you want to make more bookings for example, you have to make a rupees 1000 bookings, $1000 bookings, you have to take an approval of someone senior. So that is an approval limit which I have kept on the junior so that he does not make unauthorized bookings or something like that, and if he's making, the senior is aware of it. So one more example I would like to give is when we are setting credit limits in an organization. So if for example there's a junior, he is only allowed to set up a credit limit of, for example, $100. Now if he has to make a credit limit of supposing $200, which is for a bigger company, he has to take an approval of senior authority or senior management, and then only he can make the credit limit, because this it can be a bigger issue in terms of the bad debts that the company can have, right? So this is a control which the organization puts, that yes, you have the authority to set the credit limits, but only up to a certain limit, which is $100 and not $200. And if you're making a credit limit of supposedly $200, you have to take approval of somebody who is senior to you, so that even they are aware of the doings that you are doing in the organization, because there can be scenario wherein the junior staff is making errors and frauds also, that he is giving higher number of credit limits to the customers just to gain the revenue or just to gain the market share or whatever, right? So next one is segregation of duties. This is another very important control that you have to put in the organization. Let's take a very simple example. So for example, there's a staff one. Okay. Now there's a warehouse in which he has to calculate how much of stock does the warehouse have. Now he calculated, okay, there are six. So now he will report to staff number two. So he is actually doing the initial work, and this person will be reviewing his work. So he is the reviewer. So he will check, okay, is this six? Yes, this is six. So he will pass it. Now there can be a scenario wherein this staff is making some frauds in the absence of segregation of duty. So for example, this staff two is not there. What he does is he there are six baskets over here. Now he'll say, okay, let me take two. I'll take two for myself. So he's doing fraud, mind you. He's doing fraud here, over here. He'll take two by himself and he will keep the four over here. And he'll say, okay, because there's nobody to review his work, he will be doing fraud and he will be saying, okay, there are only four and not six. He is doing the fraud over here. For example, segregation of duty has to be there between the person who is doing the on-site work and the reviewer. So the same person cannot review his work. So if you know about the ethical threats, self review is a major threat which can occur, because obviously you will be very hesitant to point out your own mistakes and your own frauds. Of course, आप ये नहीं बोलोगे हाँ मेरे से ये गलती हुई है या मैंने ये गलती करी है, right? You'll be saying no, चार ही है. There are only four. There are not more, right? So one more example, if we say according to this paragraph over here, is that there is a person again who is bringing money from the mail. Okay. Now there's a person who has to make the financial statement. So maybe he's calculating, right? Now there has to be distinction between part one and part two, staff number one and staff number two, because if, for example, in the mail I got rupees 100, now I have to report it to this person. I will be giving 100. He will be calculating 100. He won't be biased towards me, right? I will be biased towards myself. Now if this person is not there and only I am there, I'll be taking again, I'll be keeping 20 for myself and 80 for there, and I'll be reporting it straight away, giving it. Nobody is there to check me, right? Nobody is there to review me. So that is the reason segregation of duties is very important. No two different types of work has to be done by a single person. So reduce the risk of errors and frauds. Tasks related to cash handling in other functions are separated. For example, the employee recording the cash in the post room, the staff one we mentioned over here, is distinct from the one opening the mail, the staff two, right? And executive level, it is advisable to segregate roles like, yes, this is a very important statement. I hope that you are aware of this. The chairman of an organization and the CEO of an organization have to be different. So this is a very common question that gets asked in your BT or AA MCQs, that what is the if they'll say that in the organization chairman and CEO are same person, what is the risk here, or what is the error over here? That the error is that the chairman and CEO have to be different because of segregation of duties, right? And the audit committee in the organization will report to the board of directors or will report to the audit committee and not to the finance department, because obviously finance department are the people who are actually preparing the financial statements. And if I am reporting, for example, what does auditor do? Auditors report check the financial statements, and financial statements are checked by the finance department, right? So if I am reporting it to the finance department, they'll say, okay, theek hai, we did it. We there's no error, there's no mistakes, because obviously they will be hesitant in finding out their own mistakes or their own errors, right? I hope I was able to make this point very clear using very simple examples. Now let's move forward with the management controls. Now, if you are done with MA paper or PM paper or FM paper, you would have heard about the term variances. So variances is nothing but the difference between what I actually planned, basically the standard which I planned, and the for example, planned revenue and actual revenue. For example, I planned that this year I will be able to clock approximately $100 revenue, but I was only able to clock $80 revenue. So there's a difference between these two. So the difference is known as variance. Managers utilize controls such as variance analysis to analyze the difference between planned and actual performance. So I will see that why did this variance of $20 occurred? What was the reason? Was it a genuine reason, or maybe someone did fraud or someone did error? So these are management control. Variances are part of your management controls, right? Now let's move forward with the next part, next type, which is your arithmetic and accounting controls. Now, these are mainly related to your financial positions, financial statements. So trial balance is an example, is a very good example of your arithmetical controls. Then your reconciliations, the bank reconciliations which you have studied in F3 or in your lower classes 11th and 12th. Then suspense accounts which we make. So these are all your controls for your arithmetical accuracy, that yes, your financial statements are free from any arithmetical issues or errors, right? Then next, let's talk about the next control which we can have is your human resource control. So this is the last one which we will be talking about today. Okay, I hope that you know what are HRs. So HR are any people who recruit you into the organization, and they're responsible for having good quality employees in the company, right? So whenever you go to the employee, for example, I am going to a company and I am presenting my resume to them. They will ask me several questions. First, about my qualification. Then they will also be verifying it. If I'm saying them to them that yes, I am doing ACCA, they'll be asking me some questions related to that. For example, how many papers have I done? What did I learn? Which was my favorite subject? And they can also dive deep into it, and they'll be like, okay, tell me about audit. What is audit? Tell me what is UK taxation? What is the rate? So they'll ask you little technical questions also, just to check that you have mentioned this qualification in your resume. Are you telling truth, or are you just falsifying it, right? Second thing they can ask you is about your background verification. They'll ask you from where you are, about your family. So I'll give you a very quick example. When it was my first ever interview of EY, and they came on to me, and the interviewer asked me about that, who are all there in your family? What is your family background? What does your father do? So they do a little background research about you, so that they know you, who you are, and you're not a fraud person or a criminal person, right? Then third thing is that they can also check your, whenever you're filling a form, you will always see that do you have any criminal records, or do you have any authoritarian records, like have you been actually taken by the authorities or something like that. So you have to mention that. Now one more example I would like to give you is, when there's a friend of mine who was in a big four, and when she was recruited, there was a person who came to her house and checked upon that, this is where she actually lives, this is her place, like the address is correct, and she has been living there from past how many years. And then they will also ask the people who are around her, like acquaintances or family or friends, that yes, she is a legitimate person and is not a criminal or a fraud. So they have to do a proper background research, because they are responsible for quality employees in the company. So let me quickly read this paragraph for you. Controls covers various aspects of human resources management, including qualification verification, which we just discussed, reference check, which we just discussed, criminal record screening for recruits, which we just discussed. Additionally, checks on staff competence training. Again, there can be scenario when, in your resume, if you have written that, I know Tally software, or I know Busy software, or I know Excel. So they will ask you few questions from that. So just then know that yes, you are, competent in that particular type of a software. So these are some of the controls which HR put in place, so that they have quality employees in their company. So I hope that this video was helpful for you, and you were able to understand these small terminologies better. If you have any more doubts, any more queries, you are free to comment down below, or also you are, you can message us on our Instagram page, which is at the being ACCA, and I'll see you in the next one.